All right, y'all. Welcome to Winning Lending Strategies with our very wonderful Allie Frye. It's been a minute since we've had these, but we do try to implement them about once a month for the exact same reason that we have our weekend wrap-up calls, because there's no better way to understand what's happening in the market than to hear from a collective of people, especially a loan officer, to hear what the rates are, what people are running into, what the volume is of people trying to get qualified, so we can understand what's happening in the market, whether it's a season where there's a lot of buyers getting approved, or if it seems to be a season of waiting and common challenges and things like that, is also an opportunity for us to get our questions answered. So thanks for joining us today. As you have questions, pop them in the chat or unmute. We like this to be a conversation. Obviously, Allie will share quite a bit, but this is just as much for you as it is for us. So feel free to chime in. Allie, thanks for doing this today.
Thank you. Hey guys. It's good to see some new names up here. And like Kate said, just interrupt me at any time and feel free to chime in and show your faces and speak up. So we'll just kind of run through a couple things that I prepared, and hopefully that will drum up some questions and scenarios and that sort of thing that everybody can learn from, right? The first thing I wanted to just touch on, as always, is just being, having that creative financing options. There's so many different ways that we can look at lending. A lot of people assume they might not be able to qualify, and they don't even take that first step to have that conversation. So, just really encouraging those people to at least have even a 5-minute conversation with me to explore different avenues and see what's out there. Some of um, I think the biggest thing is worrying about buying and selling at the same time. I come across that very often. And just kind of thinking outside the box is always is helpful. And not only that, but like gives them that confidence and not so much stress and worry on their end when they're trying to sell a house, especially if they think they can't qualify for both mortgage loans. I think one really big common um, thing that's not even really put out there often is that conventional loans will allow us as lenders to omit the borrower's departing primary residence from their DTI, even if it doesn't close before the new purchase. We just have to verify that it's under contract and that the financing contingencies have been cleared. Um, Most states do have that financing contingency date on their contract. For us, obviously in North Carolina, we would just go by the due diligence period. So that date would have to um, surpass. And then it could be as simple as just getting verification that that buyer is um, good to go from the closing attorney or their lender, or some underwriters will just simply take it by the contract due diligence period expiring. So, with all that said, there are ways to get around that big hurdle that comes up often. And again, it just gives them the desire to go out there and submit an offer quickly and confidently. Any questions on that? Has anybody ever heard of that or done that in the past with any of their even buyers or sellers on that side? I think it's kind of like a very unknown situation, but it is obviously just for conventional lending. I did host an in-person non-QM loan um, seminar type of thing that a lot of people came to, and it was really, really good. Everybody really enjoyed learning a lot about certain loan products that were just kind of outside the box again. I might have to just host like a webinar again or something because there was a lot of interest in that. It's there's so many buyers out there that you might be you don't know what their situation is or what they are thinking because again, a lot of people just think that they can't qualify because they aren't in that box that everybody, needs to fit in, quote unquote. But if you have investors that want to use the subject property as qualifying, that's that DSCR loan. Bank statement loans and interest only loans are really good for, I'm sorry, bank statement loans are really good for self-employed borrowers that don't necessarily have that income on their tax returns. And so is that 1099 loan program where we can look just at the 1099 for that past year versus their tax returns. If you write everything off, then we're gonna not be able to use so much income, but bank statement 1099 is a good self-employed loan program. The 40-year term is just interest only, but it gives both the interest only and a 40-year term both give buyers out there the flexible payment to have less per month. Um, Most of them are set up where it's 10-year interest only and then 30, or in the 40-year case, 10 interest only, 20-year for the 30-year, and then for the 40-year term, 10 years for interest only, and then the 30 years for amortization. Um, Obviously, there's pros and cons to all of these, but certainly we'll get them in the house. And as everybody knows, usually you don't hold the mortgage for 30 plus years. So um, a lot of times we can just get them refinanced out when they can qualify for some standard conventional lending. Um, I-10 is a good one for residents and non-residents that don't have that Social Security number. And then asset utilization, where you have somebody that has a lot of assets that, but not necessarily income on paper. So we just take their assets and calculate it based on a certain calculation to determine what the monthly income is per se for those assets. They don't have to withdraw them or liquidate them or anything like that. We just look at their statements. And then, of course, doctor's loans for doctors or dentists. This is really good for residency doctors that just started off. They want lower down payments, so we can do 100% financing and they don't have PMI on that doctor's loan as well. Um, and those go up to jumbo limits as well, so beyond that conforming loan limit of 806 and some change. Any questions about any of those that you see on here that you want to dive in a little bit deeper on? Okay.
Real quick, Allie, just, and you may have said this, but the 40-year term, is that something that's new? Or has that always been an option for like creative solutions?
That has been pretty much a standard for non-standard loans. The 40-year is only interest only though. But yeah, 40 years has been around a lot. In fact, somebody reached out to me recently and asked about that 50-year term. And I just want to make that clear to those people on here is that is not a thing. That was a lot of talk about making it a thing, but that has not come to fruition at all. In fact, I'm pretty sure it's kind of dead in the water at this point, but the 40-year has always been one of those non-QM, so non-qualified mortgage loans, so non-conventional, non-standard type of loan programs, as far as the term goes. But yeah, that's a good question. So once again, just getting your buyers kind of off the fence and more confident with their offers. Just wanted to run through some of these things that I know personally I have seen and seen success with or whatnot. So obviously communication is key when you're making your lender aware that you are putting an offer together. That will obviously help with it being a team submitting the offer with confidence, where we can update the pre-approval letter to match your offer amount. It also refreshes the date, obviously, so it shows the pre-approval letter as recent, especially for those buyers that got pre-approved and had that initial pre-approval letter, months ago. Obviously, that will look better to the listing agent and sellers. And then speaking of the listing agent, just being able to reach out and even if it's just a quick text or something to the listing agent saying, hey, these buyers are good to go. Obviously, that gives the sellers and then the listing agent confidence. I'm sure all of you who have had a listing and received that kind of, email or text or phone call have felt a little bit better, even if you weren't worried. It still makes things better as far as that goes, the offer, even if it's not like a super competitive market right now. Um, and then there's a lot of borrowers that can be really super borderline, so that initial pre-approval could be based on just estimates for taxes, insurance, HOA. So if you're going out there and you find a property with your buyer where maybe there's higher HOA dues than was put in the pre-approval letter, or the taxes are off, um, which is another plug for local lenders because I've seen so many online lenders have the tax portion of estimates just completely way off. But those things are things that could kill a deal for people that are very sensitive to debt to income ratio. I think if you have worked with me before, you know that I give you that heads up to really give me that property address so we can make sure before you put in an offer. But if it's just one of those pre-approval letters that got spit out and your buyer doesn't even really talk to the lender, then they might not even know that they are really borderline and need to be careful about the specific property. And then I also mentioned about the condo, but that's really specific to FHA borrowers. I've had at least three agents in the last 2 or 3 months reach out about a condo and not being aware that FHA has to approve those condos. There's a list that you can look each condo project up to make sure it's on a FHA approved list. But if it's not on that approved list now, it takes time to get it on the approved list. And obviously, it's not guaranteed it's going to get approved. We still have to obviously verify things on the HOA and the project itself. So, being aware even what loan program your borrower is doing before you submit in that offer. And then especially for buyers that are very payment conscious, making sure that we also know about the offer so we can provide the buyer with an up-to-date scenario and just make sure that they're 100% comfortable with submitting that offer, knowing that this is a very accurate estimate for their payment and cash to close. Um, it takes not a lot of time to just plug in the numbers based on that property, so it's not a bother at all. And again, it should just give that buyer much more confidence with not only spending it, but signing it and moving on and not having that like buyer's remorse, right? So, any questions about any of that? Cool. All right, so let's just get a little update on mortgage rates. This is obviously as of yesterday that I plugged this in. Let's see if it's updated today. Still the same as today. So 6.35, if you haven't heard me say it already, Mortgage News Daily is the go-to site resource that I send both, you guys as agents and my clients to just see the best case nationwide average. So obviously that's not going to be the rate for all borrowers, but it gives everybody a pretty good idea of as far as where we're at. Our rates are pretty spot on to that if they're, great credit and putting money down and that sort of thing. So 6.35. And then as you can, I just pulled the chart from October 1st to give you a quick, like last couple months kind of overview of where rates have gone up and down. So obviously they're always up and down, but you can kind of see a scenario as far as what that looks like. Um, I know everybody's kind of talking about the Fed meeting today. That really shouldn't have a big effect on where rates are. The biggest thing that should come out of that meeting that will be good for mortgage in general is just the predictions for 2026 that they'll have out for each member that will provide that. So kind of like a dot plot kind of information about what they say. So I am happy to kind of send that synopsis and summary of the meeting out probably tomorrow or Friday and kind of give you some more information on that and what people are saying for 2026. And then as far as mortgage apps in general, kind of gives us like a good idea of where things are too. It's been pretty flat the last 2 weeks. Obviously, with Thanksgiving in the mix and everything, that kind of always slows things down. But it still shows purchase demand up from last year, and refis are certainly still very much up, even though, as you know, I'm sure borrowers are still kind of waiting for them to continue to tick down. But as always, that's never a bad idea to reach out to your past clients. I know sometimes it can be kind of hard to figure out a reason to reach out, but that's always a good one is asking them if they might be ready to refinance and to have that conversation and see if it's will benefit them at all. And then obviously end the call with asking if they have any friends or family that are looking to buy or sell. Um, let's see. Race in general too. The My process always is, as I said, I tell them about Mortgage News Daily, but I'm very transparent when it comes to like their specific rates. I'll share my screen with them on my pre-approval call to show where rates are. I talk about buying the rate down with not only if we can get a seller credit, but if they want to use their own money, what that break even looks like. So that's one portion of my pre-approval call that I really dive into deep. And that gives them more confidence as far as that goes to, continue the buying process and putting in the offer confidently again. Um, that also allows buyers to be more value shoppers than rate shoppers. Um, they they understand and they're educated about the how rates in general work, and then that will help them not run off to, you know, all these online lenders that might be smoke and mirrors when it comes to rates and offering them super low rates that aren't necessarily free, right? And it's a horrible experience on your end and their end. Um, and if anybody has a buyer that gets pre-approved by me and they want to jump on that call, I always welcome realtors to jump on and even just be sitting in the background hearing all of that information is super helpful. And as far as the highest conversion rate from lead to borrower, which obviously will end in a closed transaction with you guys, is just making that connection via group text or email to me as your lender, just to make it a warm introduction versus putting it on them to reach out. Um, Obviously, it's still in their hands to actually schedule that call and have that conversation, but it just gives a better handoff and the transaction just goes that much smoother. There's more communication, you know, when we're talking and what's going on as well. Um, so that's what I always I get that question asked as far as how to connect and that is definitely the best way is the group text or email. Any questions on that or any other real life scenario that you guys have or challenge, wins, or anything that you guys want to come off mute and share would be amazing. Mm,
I have a random question, which I know you kind of hit on earlier about like things are a little bit stable in terms of applications you're receiving, but this is kind of a statement, kind of a question, but we always get the mentality of there are a lot of people, like North Carolina is a very transient place. A lot of people have relocated here. And so there's going to be a lot of people whose families are coming to visit them during the holidays. And so as much as we are ready to kind of wind down our business and feel like it's slow, just kind of our friendly reminder that sometimes this is actually the time where it can seem like nothing is happening, and then all of a sudden someone's visiting and now all of a sudden they're interested. It's a thought that they've had and now it's becoming more tangible because they're with family. I'm just curious if that's something that you've been seeing lately. Obviously, we're not quite to like Christmas where people would be visiting, but I'm wondering if that's something you experienced at all during Thanksgiving, for example.
yeah, I totally agree. And I've never had a slow December. Um, I think February's always been my slowest month, but um, yeah, you're right. And I had three people alone just in that Thanksgiving weekend coming down specifically, not only to see their family, but like really look at where they want to, what neighborhood they want to be in and that sort of thing, and really make it a mission to find something. So and and it again goes back to my comment about having a reason to reach out and not just be like, "Hey, how's things going?" But to really ask the right questions and um, say things like, about your holidays and if any family is visiting and kind of get some more information and hopefully a kind of a referral or a connection out of that.
Yeah, and on the topic of having a reason to reach out to people, that's another thing that you could say. It's just like, hey, friendly reminder, I know this is a busy season. Please know I am always here for you. If by any chance you have family visiting that's looking to relocate to the area, just know I'm here. It doesn't have to be if you know of anyone, but just kind of dropping that nugget. Um,
Yeah.
I know a while ago you'd mentioned kind of starting to compile information on deposits and concessions that you were seeing and stuff like that. Do you have anything
Mhm.
like that that you could share with us in terms of trends?
Honestly, the last four contracts I've gotten in the last 2 weeks have been all over the place, with price point and deposits too. So I still feel like it's just that weird market, and I'm sure you guys see it too. It's just, there's not really any specific rhyme or reason. I had one come in with, 15,000 due diligence. Um, but that was a $1.4 million house. So that kind of tracks, I guess, with like the 1%-ish. But then I had another one that hardly had any, and it was kind of a normal, like $500,000 purchase price. So I don't know. Maybe you guys know, but I can't figure it out.
What else do you guys have? I'm curious also, Allie, again, obviously it varies dramatically by client, but I'm curious if the people coming to you to get qualified or approved are like how far out they are from purchasing, if they seem to be coming kind of at the last minute right now, or if they're doing it and being like, well, in the beginning, like in the spring, I know I'm going to be ready. What would it take? Every personality type is different, but I'm curious if
Mhm.
there's a trend in that way.
Yeah, and I think maybe our like mindset as far as like business goes, like this is the time of year we start thinking about next year and our goals and that sort of thing. I think buyers are the same way because you're right. I have had a lot of people tell me their timeline is next year. And I'm always like, well, next year's around the corner. So does that mean like next month or next year this time? And they have been kind of all over, but most of them keeps mentioning spring, early summer. So I don't know if a lot of people are telling them or they're hearing it just in the media in general that, the spring market's going to be amazing this year and that sort of thing, because I know I keep hearing it too. I don't know what magic's going to happen this spring, but apparently there's going to be something because I keep hearing it. And I think our buyers are hearing that too. So getting ahead of that, and making sure they're prepared before that spring, is definitely very important. And honestly, I ask the question every time I have a call as far as what their timeline is. But even if their lease ends like next summer, they always, like always, will break it and find a house before then. I don't think I've ever known anybody to like actually make it to the end of their lease and, still be out there looking. But
On the topic of they must know something, like headlines are what people turn to as much as they turn to us as agents. It's kind of a crowdsourcing of knowledge. They're jumping into something really big, and so therefore they're trying to seek a ton of information. And all obviously, headlines have their own way of pulling people in different directions. I'm curious if you guys, the agents on this call, are experiencing any objections or any kind of repeating comments from buyers or sellers that it's pretty obvious, like, oh, they must have heard this somewhere, or it's a headline that you're hearing. I know obviously Allie spoke to like the 50-year mortgage comment, but is there anything else you guys are hearing from people? Because those are the conversations that will often put you on the spot. But it's like a thought running in the buyer's head pretty repeatedly, or
Mhm.
yeah, any comments or any other questions you guys have?
We're gonna have to start like calling on people next time.
I'm sure they're all driving in their car.
Yeah,
All
I know.
right, y'all. Well, thanks for joining us. Marinate on it. As you have questions, bring them our way. As you have clients that are interested or ready to start the process, send them to Allie. You know where to find her. We'll get this recording out to you. We'll get you her contact info. I'm sure you've heard by now, but she has changed locations. She's with Guild Mortgage, and so make sure you have updated her contact information in terms of email address. Yeah, I think that's it. Have a wonderful day, y'all. Allie, thank you so much for your time.
Thank you. Bye, guys.
Bye.